He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
Really happy to have Albert Collu back. Albert's been on the show before. Really appreciate it. President and CEO of Marathon Mortgage.
Correct.
And it's really great to talk to a lender. All the time we're talking to people on the periphery of the business, but there's sort of two entities where the rubber really hits the road. There's the people who are building properties, like building condos, building and houses. And by the way, those people really don't want to come on the show. I mean, they really they want to stay the fuck away from me. Okay, it's like the guy who coined the phrase "dog crate condo." I was in a meeting just yesterday, and the economist was talking about the problems in the real estate space with what he called mini condos. He called them the mini condos, and then another 12 people in the room. I was at the back of the room. 12 people in the room turned around and looked at me, and one of them mouthed "dog crate." Okay, so it's caught on. It's caught on. So those people will never come on the show. But Albert, thank you.
You're welcome.
Lender, somebody who's actually funding mortgages every single day, funding mortgages on people's houses every day, is lovely of you to join the show. So. Just a quick explanation of the way Albert's lender works, and you run the whole thing. Like you hire everybody, fire everybody, oversee the whole shebang.
Yeah.
You're it. Okay.
Yeah.
He is the boss of the bosses. Okay. So Albert's company works with doing mortgages on properties that are associated with a CMHC NHA approval. Okay, so everything you do has to fit within certain regulative guidelines. Marathon's not a bank, but you're doing tons of mortgages. Okay, so and today we won't do this big analysis of the difference between a mortgage finance company and a bank, but suffice to say, you're doing tons of mortgages. And let's start by saying business is up, right?
Yeah, I mean, for us, for the first 6 months, I mean, we've been explosive. We've been sort of bucked the market trends as we've been told. With the exception of the last couple of weeks, it has been incredibly busy, very fast paced.
Yeah, so I think what we're experiencing, and I'm sure you have but you're across the country.
Yes.
Okay, so here's what we know. Purchase business, buying houses, not so hot in Ontario, not so hot in British Columbia, but still very strong in Alberta.
Correct.
Decent action in the prairies in Saskatchewan, Manitoba.
Yep.
I don't think you operate in Quebec. Could I be wrong?
We're licensed in Quebec, but we're not operating.
Not active, okay. And there's business in Atlantic Canada. There's still definitely business in Atlantic Canada. Yep. So there is that purchase business, and even though it seems like for us who live in Ontario that it's like deader than dead, there's other places where it's not dead, and there's mortgages happening, and a lot of high ratio mortgages. That's less than 20% down, 5%, 10% down. Lots of those mortgages happening in Alberta. It's fair to say.
Yeah, absolutely. Yeah,
people buying.
But I think those markets you're referring to are directly related to the affordability of those regions as well.
100%.
There's just no question about that. And the activity changes. There's a good blend of purchases going on in those provinces you mentioned. But in Ontario, most of the action, for lack of a better phrase, is really around good clients finding better rates for switches and renewals.
This is the big thing. There is this. They've been talking about it. Like all the banks, all the analysts have been talking about it. There is a renewal tidal wave sweeping through Canada.
Yes.
Originations that occurred in the year 2000. We think of that as the bad COVID year, and there was a couple of terrible quarters, but then the back end of 2020 was wildly busy. Okay. And 2021 was the biggest mortgage year in the history of Canada. So that wave of 5-year mortgages, because that's what we sell in Canada mainly, is 5-year mortgages, either variable or fixed. That wave is going to keep sweeping through for the next 20 months, 22 months. And we feel it in our company. Tremendous interest in people trying to get a better deal on their mortgage, because let's face it, some of these people had 1.69, 2.29 mortgages.
Correct.
And that ain't available right now.
That's right.
So you got to get the best deal you can. So it's fair to say business is up. Okay. Now rates are volatile, though. I mean,
absolutely,
and that's a challenge, I guess, for you guys. I mean, it's just a daily challenge.
Yeah, it is. You and I were talking off camera, so to speak, and I don't know. You and I have been doing this for a hell of a long time. I think you and I have known each other for 20-something years, on and off. But
mortgage business, you and I are mortgage business veterans. I hate the word seasoned, because it sounds like we're steak. Okay, but like we're vets. 100% we're vets.
You don't realize till you look back, but to your point about volatility, I don't think I've seen it this volatile ever.
Me either. I have not seen it this volatile. No.
Yeah, I mean these rates are up and down and sideways, and it's so many factors contributing to that, right?
As we've spoken before on the show, the fixed mortgage rates in Canada are driven by bond yields. They're driven by Government of Canada bonds, with some impact from swap spreads, which is essentially credit risk premium. And God, it's wild. I mean, you and I look at. I guess you look at bond yields every day, like I do.
Yeah,
and maybe a couple times a day. And I'll be damned if I can remember any time in my career that I could look at 10, 12, 15, 20 basis point spreads in a day. Like it's no longer unusual to see 10 basis point spread movement every single day.
Absolutely.
Okay? Which is just fucking nuts. I mean, like there was nothing like that for most of for all these 20 years, 20, 25, long time. Nothing like it. Like there was some big jumps and there was some huge plunges in economic, crises, but not this daily madness.
No, there for sure. The challenge though is that there a lot of the stuff that is actually impacting that volatility up and down, is actually not empirical. It's things like you'll hear someone say something from our southerly neighbors, and the market reacts, or the market panics, and then something else is said that's a little bit more positive, and you'll see that reflected almost immediately, whether it's the stock market, whether it's in the pricing for mortgages. So there's so many variables going on right now, Ron, that are impacting rates. It's just again, we've never seen anything like this before.
No, we haven't. The reality is, as to your point, somebody says, and it doesn't necessarily even need to be Trump. It could be somebody in Canada, rumors that a tariff deal are close. Okay, a tariff deal is close. Okay, bond yields move. They change. And then 2 days later, maybe the same group of rumor makers, oh no, I think it's bad. I think communications have fallen apart and it doesn't look like we're going to get a deal soon. And bond yields change again. And then one day missiles are flying in the Middle East, and then the next day, nope, there's a ceasefire, and suddenly Trump is Europe's daddy. I mean, it's just it's just like I've never lived through this before. I mean, it's the strangest environment to try to predict what people should do. I mean, because ultimately our customers look to us for some kind of advice on rates. And when there's this much action, it's in terms of changes in rates, not easy. So I didn't have a chance to ask you this, but I'll ask you this now. I'll put you on the spot a little bit.
Sure.
Fixed or variable? I mean, I'll tell you my thesis, and you're more than welcome. And then I'd love to know yours. I believed that when we knew that the Bank of Canada was dropping rates, because we knew that a year ago. We knew that they were going to be a long cycle of rate cuts. Okay, so at the time, fixed rates were high. They were like in the low fives and in the high fours. And our suggestion to everyone was go variable. It will come down. It did come down.
It did.
Okay, it did come down. Today, it's hard to say. Like this level of volatility we've experienced in the last 3 months has made me question myself on variable. I firmly believe there's another 2 cuts coming. I believe the Bank of Canada will cut twice. Whether it's next month or September, October, whenever it is, I believe that the sort of difficulties with unemployment and the sort of inflation is not fixed. Nobody goes to the grocery store. If you buy a steak for the barbecue on the weekend, you don't think the inflation is down, right? I mean, that's not your experience either, right? But some things are coming down. Rents are coming down, obviously. We see that across the board in our experience. So I think inflation is except for food, which is terrible, and unfortunately automobiles now. So if you need a new car, I hope you bought like 3 months ago. But I'm a little more likely to say if you can get a fixed rate below 4%, you should probably grab it.
I clearly share that. I think if you're in the high 3s, low 4s, I'd lock it in, to be honest with you. I agree with your comments about the inflation and the adjustable rates and variable rate mortgages that are tied to prime, but I don't think there's going to be that much more change in terms of the Bank of Canada. Maybe one or two, I think I'll agree with that. But let's say you're right. If there's 2 more cuts, maybe a total of 50 basis points, you're going to have prime at 4.45, give or take. You're going to have a discount, and you're going to be sort of kind of speculating and landing right on a fixed rate that is available today. And God knows what's going to happen on a fixed rate in 2-3 months from now. You mentioned the inflation. It's kind of interesting because the numbers are actually deceiving. The inflation rate, I think the last number was 1.7. But I think people need to be careful because the core items for that index are actually still quite high. The repeal, if you will, of the carbon tax has actually displaced that number. So it's a bit of a misleader. So anyway, to answer your question, I have personally quickly shifted from, considering an adjustable rate mortgage. I would have said definitively a year and a half ago, adjustable is the way to go. But I'm more inclined now, particularly for first-time home buyers, if you want something that's a little bit more stable and you want to know exactly what you're locked in for your next 3, 4, 5 years, fixed rate is the way to go, my opinion.
Yeah, I think the thing that you and I both know, because we've lived through it multiple times, it's not the first time we've lived through it, this crazy run-up of inflation that we experienced where some poor people were stuck at 6% rates. I mean, sweet Jesus, that ain't good. And what we experienced in 2022 and 2023. It's like people got to realize if you're in that bad scenario where you have a variable rate product where the price adjusts every single time, you felt it. Now, there's a whole group of people who'd say, well, we think that's more fair that they change the payment every time the Bank of Canada raised, because you at least knew where you were, as opposed to some bank products where it went for months and months and months, your payment stayed the same, and then one day you got a letter and saying, hey, you hit a trigger rate, you got to move up now. Or in the case of RBC, that you couldn't go negative amortization. And, oh, look, you're negative am, so we're raising your payment. So
awful.
So I can make a case for both sides of the argument. But when you experience this thing of, hey, what do you mean my rate's going up? Nobody likes it. Everybody hates it. And by the time 95% of everybody sees that they're getting into a bad spot on variable rates, it's too late to take a fix. The fix went up way before.
You missed it.
You missed it.
Yeah, you totally missed it. It's interesting. It's not really probably the context in this particular podcast, but it's interesting that even in my day-to-day dealings, personally and professionally, the amount of Canadians that actually don't know the difference between an adjustable and a variable, everybody uses those terms interchangeably as though they're the same product, and they're quite in fact not. So I think that may have contributed to some of the noise we got back, December 23, I think it was, when all the trigger rates came in. Yeah.
That was
ugly. Got a lot of bad press.
There was a lot of very sad people. Although, the truth is Canadians went through it pretty damn well. Okay.
They sure did.
A tiny, tiny minority of people had to sell. But for everybody who thought that it would be a catastrophic development in the Canadian mortgage industry, it was not. We chatted about this earlier. The bank default rates have gone up. So a bank default rate is 90 days of not full payment. You could have missed a payment, or you could have not made a full payment if you go 90 days. So bank default is up. It's up. It was ridiculous before. I think bank default was like 14 basis points. So it's up. But your company and companies like yours are significantly lower. than a bank.
We are.
They're like wildly lower.
Yeah.
And
About a third of that.
It's amazing. And Albert has the best, but there's a bunch of companies in the same situation who are always 35 or 40% lower than bank default. And it's really because there's no extended ratios in what you do. So no extended ratios, just for the audience to understand, is if you have a bank can say, well, you're not 38-44 debt ratios simply being what your total family payouts are versus what your mortgage payment is, total debt payouts. But I'm oversimplifying, but we don't have time. And bank can go higher. Bank can go significantly higher. And that sometimes opens the bank up for more. And banks do a lot of rentals, and you don't do any that you know of. Yeah.
No, a lot of that's true. And I think I don't want to poke at the banks per se, but they've had a higher degree of tolerance for the ratios. I mean, it's not uncommon to see a 60-65% TDS on some of these loans.
Whoa. Yeah.
Factually.
Well, I know.
And I don't begrudge that. I mean, they've got the economic power to do it, but I think the problem is all these things we talk about never hit affordability. And the problem is now when people are starting to feel the crunch and they're going to their home like an ATM that they have for the last 10, 15 years, there's no more equity left.
No, that is one of the most compelling statements in Ontario and British Columbia today.
Yeah.
There's the ability to use your home as a source of bill payment is essentially gone. Mm-hmm. Banks won't allow it anymore. They're pulling back. The property valuations themselves have come off to a certain extent. And the rules that the regulator has created make it a little bit more difficult. Banks are under a little bit more scrutiny now. And the days of the house as the emergency solution to everything is over.
It's gone. And
that's a real affordability issue.
Yeah, it sure is.
100%.
It's funny because you're talking about, fixed versus adjustable variable, so on and so forth. But, we're talking about 10 basis points, 20 basis points, 30 basis points in all these different scenarios in terms of differences. But none of those help you address the core issue. Because I would say this, if the affordability was much higher, I don't think anyone gives a flying fadoo whether they're paying $409, $414, or $399. At the end of the day, it's, you're talking about an extra $3.50 a week on an average mortgage between those prices. It's everybody right now is so forced to find the best rate because the difference between getting in a home or not. It's really that simple.
On the purchase side, it's getting in or not is 100% true. And on the survival side, for a whole bunch of homeowners, look, there's a lot of rich people in Canada. There's a lot of people who have no mortgage. We got to recognize that. There's a lot of income disparity where people are very well off and everything's financially secure for them. But there's a bunch of people with young kids, who just got into the market, housing market recently. This is hellacious. I mean, their insurance is up, their property taxes are up, they might be getting less over time, they might be getting a smaller bonus. God forbid that somebody has a job loss. I mean, it's a radical change from where it was a couple of years ago. And you need every nickel. You got to save on every nickel, that's for sure. So
yeah, agreed.
So let's talk about something that Albert, as a lender, has a lot of expertise at, and he's in our industry for all these years. You're not old. I guess you started when you were a teenager. You're not old like me, that's for sure. God knows you look a shitload better than I do. I made fun of myself the other day. I look like Jabba the Hutt in a fucking shirt and tie, but you look a lot better. But the time in the business is meaningful. It just is.
Yeah, it is.
You can be the smartest guy in the world, and if you haven't seen shit happen, if you haven't seen things go wrong, as you and I have seen things go wrong in the past, it's sometimes hard to relate to. It's hard to relate to something you've never experienced. Okay, let's just say Albert and I have been through the wars. So, one of the things that is really important to everybody who's underwriting a mortgage and issuing a mortgage and funding a mortgage, putting that money out like you do every single day, is this unending mortgage document fraud problem that just never, no matter how many ways we think we're almost there, we think we can solve it, we think we can make progress, boom, the progress retreats. Okay. We thought we had it licked a year and a bit ago, got into the formal budget of the federal government to get a method of checking, a foolproof method of checking. The tax documents were verifiable and truthful, and they were not fakes. And suddenly that's just quieted down, and God knows where it is. But let's start at the beginning.
Okay.
You're someone who sees you're the boss, but I think when something goes seriously wrong on some serious concerns about documents, I think it might even filter up to you. And you've had that experience with other jobs as well. So describe it to us a bit. Like the documents are in, and how's typically the first questioning of the documents start? How does that whole thing start of the income documents?
That's a great question. Maybe I'll just break that down into two quick things. So there's the obvious and the less obvious start points. So the more obvious ones are, for us anyway, is reasonability. Someone is giving you a self-employed, we use BFS as an acronym in our industry.
Business for self. Yeah.
Business for self loan. And they'll just seem a little askew. I'm a
little too high?
Little too high. I'll give you an example, one that you see a lot in all of the lenders I've worked at. I'm a hairdresser working out of my basement. Nothing wrong with that.
Nope.
Making $160,000 a year. So, right. But you can't be wired. I mean, some people are successful within a certain industry. They may be an outlier. You can't prejudice that per se, but you immediately.
You can't just stamp canceled on it.
Yeah, no, you're out of here.
Yeah, you're a liar. Yeah.
I know you gave great perms, but you're done. You can't do that, but it's the first flag. It's an obvious thing where it's okay, we need to probe here. Then the less obvious stuff is when you first get the first layer, everything seems to be in order. And usually it's reasonable. So, is that, I hate to use the word good fraud or the term, but it's done well.
It's quality manufactured fraud.
It's quality manufactured. So, using the same example, you'll have a hairdresser presented as $70,000. Now we're in the striking distance. That makes sense, right? Yeah. And then you start to go down the process of reviewing documentation, and you see one thing that's not quite wrong, but it raises a question, and then you start looking deeper and deeper, and that used to be a little bit easier, even as little as 10 years ago. It is getting so good, Ron, that even when you think you've caught it, you've missed it, or vice versa. It's very, very good. And now we have all these sophisticated processes, right? So,
well, let's face it. If you go back even 3 years ago, you couldn't easily fake a voice.
No.
But the progress we've reached today is that you can invent whole people in AI.
Correct.
You can have it, and not expensive. It's not like you're not doing CGI like Hollywood. I mean, you can invent an entire speaking person who looks completely real from some prompts on your computer. I mean, that's doable. So obviously, documents much simpler. That's really simple. So today, the creation of absolutely flawless tax documents and all kinds of supporting documents is enormously easier. It just is.
No question.
And it's available. Now, if we roll back to the starting point of all this, you and I both know that in the case of a purchase of a home, and let's face it, purchases aren't wildly busy in Ontario and British Columbia, but they're still happening. There's somebody's buying a house probably right now as we speak in the province of Ontario. It used to be, we go back to 2021, that was probably about 4 people, but today it's at least one person's buying as we're having this discussion. And they are working with a realtor. The realtor is always the starting point. And I'm not afraid to say this because there's a ton of great realtors, honest, decent, would never do a wrong thing realtors. But there's just a certain percentage of them who think, hey, if I can engineer a sale here by creating by working with a mortgage broker or working with a bank sales rep to create false documents. So we have a network of people, a cabal of people who are going to put this together. Why not offer it? I mean, these people want a certain kind of home that I think that they probably could afford, like, because I also want to make a commission, and their incomes, their documentable incomes are not that easy, but they don't know. The bank will never allow the idea that, grandma's going to move in with them and operate a daycare in the basement. I mean, that's not an allowable type of income that we can imagine, or that whoever is going to do whatever to make money that they haven't even revealed to CRA, this method of making money that they're using. So they think they can do it okay. So I, as a realtor, know a mortgage broker, or I know a bank commission sales rep who knows another guy who's a genius at creating documents, and we can make this done, and we can make this happen for people. And the weird terminology that came to develop is we're going to put some salt and pepper on it. We're going to put some salt and pepper on these income documents, and we're going to make it work for you.
Yeah.
And what a lot of people think is that those people who go along with it, those home buyers who go along with this idea, are fundamentally evil people. But here's the thing that you mentioned to me.
Yeah.
That famous survey from just about a year ago, and the leading credit bureau in this country, in Canada, Equifax, did a survey, and they determined that 47% of people in this whole country believed that exaggerating their income to get credit was not an awful thing to do. It was not something that was a bad thing in their mind, which sort of indicates they're willing to do it, right?
Yeah, they just don't see it as being misaligned behavior, right? So if you start at that point, then when the suggestion is made to them that, hey, we can put some salt and pepper on these documents, make sure you get that house that you really want, they're like, okay, that makes sense. But it's, it's such an easy conversation to simplify and say, oh, fraud is this. But we can probably spend 2 hours talking about all the ways that fraud is done. Now, we're not going to turn this into how to, but in terms of the centers of influences, how these things get perpetuated, most times, in my experience anyway, it's not the borrowers per se directly perpetrating all the logistical things to make that mortgage come to fruition. They're not coming to you, Ron, and saying, listen, you know what, I got a nice portfolio here, and these are the ones that we just fresh off the press. Everything you need is right here, right? That's not the case. And
No.
and what I'm going to share with you right now are actually very, very truthful. So when I first started in this industry quite some time ago, there was an individual, no longer, he's been cast out of the industry, and rightly so, that ahead of all this AI and all this technology that you and I are referring to, had such a beautiful sweatshop going. He had one part of his office that would create the documentation that we're referring to, and in another small closet, like, with some buckets and pails, he had 2 or 3 people who would answer the phones because they were the employers, if you will. It was such a sophisticated shop. The success story there is he was caught, and he's no longer in the industry. But that's not to put on the broker. Then, you're talking about referral sources, and, realtors may come up with that, but there are other referral sources we can just keep going on and on about, who I have literally heard them say, oh, no, don't worry, I know someone who can do this for $2,000-$3,000. I'm like, Jesus, are you kidding me?
Yeah.
It's so cavalier and so nonchalant that it's concerning. And then, the other stat that gets overlaid onto these that's important is that the instance of, we're using the F word here, the fraud, is doubled when you talk about first-time home buyers or those that don't have mortgages. They're more likely to perpetrate this stuff than the honest Joe and Jane, right?
Yeah, and there was, and I'm told by people inside banking, because you're not really in the refinance business. You're not in the business of refinancing mortgage to give people more money.
We do refinance.
You do,
well. Yeah,
but it's not huge. It's not a huge part of your business.
No, it's not. Correct.
Yeah. But in the banks, if you go down to one of the big 6 banks, it's a huge part of their business. It's a massive part of their business.
Yeah.
And it's an area of great interest today because people, just as you said, the affordability issues that weigh on families today, and if they feel they must refinance their home to get some money out, to pay some bills, to put them in a functional financial position to get through what's going on right now, they're also in some cases, regrettably, engaging in that same thing, that they would enhance their income to be able to get more money out of their house if they could.
Correct.
So, because you and I reflected on the fact that the mortgage document fraud had fallen off in 2023. It had sort of declined. It declined fairly significantly. But it looks like it's right back today. It's come back strong. Maybe that is the access to better technology that makes it, or people just need the money. But to your point, and I just wanted to elaborate a bit on what you said, because sometimes the audience doesn't understand this. It's not just fake documents in some cases. No. It's a whole elaborate scheme of people who know exactly how the mortgage business works, exactly how mortgage underwriting works, and they will have, as you said, a shop set up to supply expert documents, flawless, double check, triple check, created from digital apps to make perfect down payment documents, perfect bank statements, perfect, and they're all fake, okay, but they're perfect. They have perfect tax documents, T4s, pay stubs that look like they're from the big payroll companies, whether it's ADP or Ceridian. They have like perfect. They need it, but sometimes you need a fake employer. You like you're working as a, you're working sub dura as 3 different gigs and reporting tax on none of them. Okay, you're Uber at some point, you're Skip at some point, you're doing some other security work at night, and none of them really. I mean, who knows? You can't produce any viable income documents, and those people sometimes need a whole employment out of whole cloth, like just invented. Okay.
Yeah. Oh, yeah.
And that's what you referred to, the people who are running this super sophisticated operation where they're setting up websites. They're creating whole fake businesses.
Correct.
And they seed the websites 18, 24 months in advance. Yeah, I know that sounds crazy, folks, that they would have that kind of patience. But if you're a professional fraudster, you can have patience. I mean, you can play a long game. And they're setting up websites 20 months in advance, creating social media entries 20 months in advance, doing activities on them every day. There's some bot that's doing some activity on the website, doing some activity in social media. And at a certain point, you bring that company along that now it's ready to do the fake work, to actually. And the call center you talked about, like the guys in the broom closet answering the phones. Hi, it's ABC Company. How can I help you? And you want to talk to the head of HR to confirm an income. And they say, oh, please hold for the head of HR. And they put you on hold. And they motion at the person next to them, the guy at the cubicle next to them, and say, hey, you're the head of HR today. It's this company, okay? And boom. It's an elaborate scheme.
Yeah.
Really elaborate.
Yeah. All that's really happened is not only the issue of fraud has dissipated, it's the mechanisms are changing, and they're changing quick. To your point, without belaboring, I mean, you're getting all these documentations and you're like, my goodness, they're fantastic. And you have to dig so deep, you have to hit the water table in terms of your investigative skills.
Yeah.
Right? And then, the unintended consequence is you have great Canadians that are out there looking for homes who are doing it right, for lack of a better phrase, and you over-scrutinize. That's just an industry-wide problem right now. And then you have other things that just make the whole transaction more complex, and they become suspicious, not because they've done anything wrong, but just because of what we're all enduring. So, first-time home buyers, particularly a certain age bracket, it's not uncommon for them to have 5, 6, 7 different bank accounts because they're flipping every 90 days to get an extra percentage on their savings.
Like old farts like me just used to have the same bank for like 25 years, but like smart young people, they just say, well, you got a better deal today. I'm going with you, and then I'm taking the 90-day special, and then I get, that's some extra complexity. We'll touch on AML in a second, but to think about fraud for a minute, I'm glad you brought that up. It's causing us to the specter of fraud that hangs over our industry is causing us to work the bejeebers out of honest people. The vast majority of the people we talk to are completely honest.
Absolutely.
Doing nothing wrong.
Yeah.
But they're starting to lose their minds and saying, like, wait a minute, I gave you my pay stub. I gave you my T4s. I gave you my job letter. Now you want bank statements to see if my payroll's going into my bank? Like, what the fuck's going on here? This is crazy.
Yeah.
And they're completely honest people, because there's so many times when I'm reading comments in social media about the mortgage experience, there is a relentless reference to the same thing. God, there were so many documents. God, they had to chase so many. God, I had to look for all them. Oh, and then when I gave some, then they called me back and they needed more. I constantly see that comment all over the place when it comes to mortgages.
Correct.
And folks, just so you understand it ain't you, it's the crooks. And the crooks, like let's face it, when you go to the airport and go through all that security, you were fine. Like you were doing nothing wrong.
Right.
But we all go through the security. It's all a pain in the ass.
Just the way it is. Yeah.
Just the way it is. There's no escape. Okay. So that's what we've got now in the mortgage business. We've got the effectively airport security for everybody.
That's a great analogy. You know, I jest with friends. I tell them, listen, you want to feel two painful experiences? One's a colonoscopy and the other one's a new mortgage app. So, and I don't know which one's worse, right? It's
well, the mortgage app's longer.
Yeah, the mortgage app is longer.
Yeah,
at least I can knock you out for the former. But you know, the interesting thing though is you're absolutely right. We're not talking about the majority of people. We're probably talking about
2-3%.
2-3%. I agree. You know, let's even say 5%. If we made it so bloody miserable for these Canadians, and you know, from an industry perspective, you appreciate and respect why a broker may be upset or may push back, but listen, no lender, whether they're a bank or monoline or mortgage finance company like we are, we don't wake up in the morning and say, you know what, we want to make this arduous and we really want to be a pain in the ass.
Because it costs you money.
It costs us money. You know, it's really this simple, not to bore the audience, but at the end of the day, it's really this simple. If we've made a significant error, let's strike out significant, we have to take that loan back. We have to take it back. Not the broker, not the borrower. We take it back.
You're on the hook.
We're on the hook.
Yeah.
You know, and we're not talking about a few dollars here. It's not like I'm taking back a 6-pack of donuts.
There's no small mortgages in Canada. No.
So, and then it's not even that. Even if the mortgage goes through, there's so many layers, related to where we're probably going to go with FinTrack and AML and all. Like, we have a lot of obligations. Right. And we know all the industry participants on the lending side, we all understand the agony and the arduous process that brokers have to go through. But it's not by design. It's not by intention. It's just got to be done. We got to get through that security gate to get on the plane to finally get to the beach.
So this brings us to why efficient, highly effective solutions are still not here. I've spent the last 5 years of my life devoted to accomplishing digital verification through CRA of tax documents that are submitted to lenders. Now, before everybody flies off the handle, because there's a certain number of people who want to say, no, there's a privacy problem. Yeah, fuck you. I don't want you to do that. Listen carefully. First of all, we're talking about one single number on your tax return. We're not talking about studying your tax return.
Right.
We're not talking about questioning all the things of deductions or what this or that. There's one number we want to cross-reference with CRA as a lender. And by the way, no mortgage broker is going to do this. People like Albert are going to do this, like corporations that are bonded and that have strict privacy policies and that are only going to communicate with directly to CRA in a highly secure manner, probably a more secure manner than you're communicating with CRA about your own tax return, because God knows they've been hacked for tax returns, okay? Yep. So we're going to develop because we're only asking to confirm one single number. It's your identity, couple of items, name, social insurance number, address. Here's what's line 15,000. Here's what we've got. It's a yes or no. We don't even need to know what the number is on your side.
We don't care.
You just want to say, is that the same number, the number that we have been given on your the tax document CRA provides? Is it the same? Yes, it is. Bingo. We're done. Now, we're not totally done. We're still going to do some more confirmation, but this is the key for everybody listening and watching. They've been doing this in the United States for nearly 19 years now.
Correct.
Okay. It has been exactly the same in the States.
Yeah.
Nobody complains about it. Nobody is bitching about it down there. It's just part of the lending system. There's absolutely no pushback. Everyone knows what they have to do. You got to develop. You got to provide your W-2s. You got to provide all this. Okay. So this is not like it's not a test. We're not testing anything. This has been going on in the United States on a much, much, much bigger scale for all these years and working just fine. And as much as we thought we're halfway there a year and a half ago, we had the government announce it, put it in the budget, there will be confirmation of mortgage documents through the banking system to ensure the integrity of the Canadian mortgage market was right in the budget. I can even take a screenshot of the bullshit right on the thing. Goes to CRA to die. Like, CRA has 60,000 employees. They might be down a couple thousand now, but it's just in bureaucratic hell.
Mm-hmm.
Never gets out. Never, there was supposed to be a report in March. Then CRA said, oh, there's an election on. We can't produce any of your reports.
Mm-hmm.
Wait a minute. This isn't political. What the fuck are you talking about? This is just process, okay? Nope. So now we're in the middle of June, end of June. Nothing. There's nothing, okay? Why is it? People like to think of sinister answers. People like to say, we think that it's the government wants to support mortgage fraud. I don't believe that's true at all, okay? I think that, like a lot of things in Canada, once it goes into that bureaucratic maze, it doesn't come out again.
No.
And that's what we're up to. So,
yeah, there's so much there. First of all, I agree with the comment about this is not political.
Nope.
So like, do the plows stop plowing the roads after a snowfall because we're in the middle of an election? No.
Nope.
So let's get to the reality. And what's very perplexing for me, Ron, is it's not as though CRA has not been impacted by this. They had $36 billion, give or take a few bucks, in CERB fraud. Okay? Some of it perpetuated by their own employees.
Yes, exactly.
So I don't know how much stimulus you need to say, wait a minute now, I think we need to lock this down. And it's interesting, you and I were talking, before we turn these cameras on, it's my belief that if we don't even need to know all those particulars, red light, yellow light, or a red light, green light.
Is this number correct?
Yeah,
yes,
is this
no?
right?
Yeah.
And you know what? We can even put in a reasonable standard deviation of like a few percentages, whatever the case is.
Whatever.
That's all we're asking for. But it's interesting. I've actually heard people say same about, well, I don't want someone checking in on my information. Well, wait a minute now. Let's unpack that. You're giving people 6 months, 90 days, 12 months bank statements, depending on your situation. You're giving them your T4. You get your level of employment. How much more?
You've given us your information.
You've given it to it. What more? Apart from taking an X-ray of your liver, what more could I actually look for, right? So, and what I think what gets lost in all this is you're talking about all the sinister people, to your point, but we're actually protecting those that are doing it right. Hey, just listen. We're making sure that you are who you are, and we're doing this right. And I believe, as I was saying with you at lunch, I believe if the CRA would do this, everything else that we're talking around fraud doesn't go away, but man, does it stop quite a bit very quickly, because all those other things we were talking about mean nothing. The major domino, the major goalpost is let's start with income. And if your income isn't coming back as being verified, I don't give a flying fidoo if you have great documentation. I don't care if you got a website. I don't care if you're able to produce a T1 general for the last 3 years, because we know that something's askew.
Well, this item is false. Exactly.
This is false.
Yeah.
Right? So I would argue that the fact that we don't have a mechanism like we do in the U.S. through CRA is empowering all these other tools. These things...
It builds the fraud industry.
Yeah. They're like, wait a minute. We got through the biggest entrance of the mortgage transaction. Now so basically what they've done is they've taken the turkey, put on the platter. They've got that. Now they're just giving us the little radish and the little parsley.
Trimmings.
They're giving us the trimmings because we've empowered that. But all that goes away. There's no turkey if we know that CRA says, no, wait a minute, Ron, that's not
the wrong number.
That's not the number.
Wrong number.
And it's such an easy fix. We're not talking about sophisticated rocket engineering or software engineering here. This is easy peasy stuff at this day and age.
Oh, and we're not saying that some random mortgage broker is going to be doing this checking. A financial institution bonded has to obey the privacy commissioner, has to have secure connections. The amount of bullshit that lenders have to go through just to exist. We're not worried about that connection. We're not worried about the lender, okay? And to your point, they gave us everything anyway. We got it.
I don't know how much more we can get.
Is it true? Yes or no? So the fight about that, and some people there's a little bit of pushback. People say, well, Ron, it's not a perfect solution. It doesn't end all of it. Here's what it does. If you've got an income that suddenly rocketed, because in theory, you could pretend to switch companies in January to one of these invented companies, one of these fake companies, get a fake job letter, a fake pay stub, and get a confirmation. But what you cannot hide is When we ask to see, you have to give us your truthful income from the previous year. And if in the previous year you made 38 grand and this year you're making 107, we know who we need to look at. Okay. We know who we need to work over. So that means that the amount of incidents of mortgage document fraud falls off a cliff. That's just the truth.
Yeah.
People say, well, it's not a 100% solution. Who gives a shit? If it's an 85% solution on automatic pilot, okay, then that whole industry of people doing fraud shrinks overnight. They go to business.
You know what's not a solution? Doing nothing.
Doing nothing is
like that is not a start point at all,
Jesus,
right?
No.
But you know what's interesting is when you get into these conversations, invariably you talk. It always comes from like this dark place, right? You're talking because it's all nefarious. And yeah, of course, fraud is nefarious, but there is an upside to this, in my opinion, and that upside is, what about the experience for those that are doing it right? Could you imagine going to one of your borrowers, Ron, and say, hey, you know what? You've been pinged, for lack of a better phrase. Everything's good. And the documentation on what you're asking for has been greatly reduced, right? So you've actually smoothed out the process for good borrowers. Number two, while we can't actually quantify the impacts economically of fraud, we know it's massive. What does that do in the larger scope of things? Does that mean it impacts pricing positively? Do rates get reduced? Do we have to backlog or back out some of our risk modeling pricing?
Because there's less risk.
There's less risk. Things become better. I think the grand scheme of things, everyone wins. Now, I totally agree. Just because we're getting a ping on an NOA from 2024 or 2023 doesn't mean that the whole transaction and everything's gone. But man, oh man, does it really help?
Oh, Jesus.
It's not even close.
So I'm so glad you made this point, the last point you made. It is, to my mind, the real essence of this. The essence of this is fairness.
Yes.
So for the people who are dead honest, did nothing wrong, are completely straightforward about everything they're doing, it's fair to them that, they still may get to push back on their approval, but it's sure as shit fairer than some sons of bitches who are making nowhere near that income, paying somebody $5,000 to create that income. That's unfair. And I think everybody in Canada is just fucking fed up with unfairness about things that are about, oh yeah, we think there's fraud going on over there. Really? Okay, well, are they going to try to stop it? It doesn't look like it. Not stopping it at all. So why am I being so honest? Like, what the fuck? It's like the time that they knocked over the casino in Markham. There was a Chinese casino being run out of a house, and this is a lavish house, huge mansion. There were sex workers there. There was guns there to maintaining security. There was $3 million in cash. There were drugs being handed out to the players. I mean, it was all there. Wow. They knocked it over. There's 26 cops ran in, took the place down, arrested a bunch of people, seized all the stuff. 8 months later, judge tosses it out, illegal wiretaps. So everybody, but hold on a second. Is that fair? I mean, you had a roulette table. You had 12 roulette tables in your house. I mean, $3 million. I mean, like, yeah. We think you were guilty as fuck. Okay. But no, we let them all go. So that's the deal in Canada, is that there's too much exposure of honest people to completely unfair dishonesty. And they get away with it. It's a white-collar crime capital. And to let this thing go, to be CRA and think that, oh, well, we'll get to it when we get to it. The fraud goes on, CRA. It goes on. And if you have a means to significantly reduce it, why aren't you doing it? Like, where is the fairness in that? You'd rather chase somebody because you think they got more tips? Like, you're gonna hound some poor server because you think they underreported their tips, and you're gonna grind them into the dust, okay? And yet, can't do anything about mortgage fraud. CRA, you're guilty of being unfair to Canadians. That's the truth.
Well, I think you and I, maybe longer, have been talking about this very piece for 10 years.
10 years.
I don't know, maybe longer.
Longer, yeah.
And we're both puzzled as to why it doesn't happen, right? It's, again, going back to my starting point, they're not a distant player. They got hit to the tune of $30-something billion in CERB fraud alone.
Yeah.
Like, come on, man. And the other trickle down that may not be as obvious is that when you allow this, we keep talking about affordability in this country, like no other country can speak of in terms of housing markets.
All
right?
true. All true.
So what are you doing? You're empowering people who they can't even afford one house, but yet they end up with 5 Airbnbs. So it impacts the housing market. It shrinks up the supply. Not right now. I mean, there was tons of supply, but you escalate prices, and the couple and the families that are doing it right are the ones that pay the consequence.
Absolutely true.
Right?
Absolutely true.
I mean, look at what was it, 30-40% in some markets during the COVID years, the housing valuations. Like, are you crazy? Like, it doesn't make sense. We need to do something. We don't want to stop people from getting into houses, but you certainly don't want to have someone who is doing some part-time work and yet he's got a portfolio of 6, 5, 7 houses. It isn't right.
Isn't right.
Right.
Listen, Albert, thank you. And because it's obvious you're as passionate about this as I am. And this is something we cannot take our foot off the pedal on this. I'm going to keep going after it. You're going to keep going after it. We're going to keep pushing for it. We've got to stop mortgage document fraud. Thank you. It's great to have you on. The lender's insight into what's going on right now. Thanks so much.
Thank you.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.